Good morning, everyone. Good morning, YouTube. Hope everyone is doing well. And we're going to break down what's going on here. It's Monday, the first trading day of the week after a shortened week that we had last week. I said week like 7 times. But the main topic at hand continues to be the debt ceiling, right? That's going to be the main thing that we're going to talk about today. I'm going to also break down some levels and some ideas and talk about a little what had happened on Friday, right? We'll talk a bit more about that. Friday, OPEX, right? OPEX managed to squeeze this market into oblivion, right? We had a very strong rally. And now what's going on here is we're still trying to sustain some of this upside balance on this pretty impressive bid that happened on Friday. And today's going to be a make or break day, in my opinion, for what is to come for the next week, realistically, and potentially the next leg in the market. So, first and foremost, I want to talk about this debt ceiling, right? The battle escalates on Capitol Hill. A once far-fetched solution to the dilemma has resurfaced again. The Treasury would mint a $1 trillion platinum coin deposited at the Federal Reserve, and the asset swap would result in an extra $1 trillion to cover a big portion of Washington's bills. So, extraordinary measures are already being employed by the Treasury and investors. Investors should note how it may affect their portfolios. So there could be, right, back to this minting process. The concept of a $1 trillion coin dates back to 1992 when populist president candidate Bo Gritz suggested the idea during his second White House run. So the idea resurfaced during the debt ceiling crisis in 2013, and the Obama administration even explored the possibility before the impasse came to an end with a continuing resolution. So the method results in the U.S. minting more money to pay for its obligations rather than borrowing through treasuries or even the collection of taxes. So while the $1 trillion coin is not illegal, the accounting ploy has been frowned upon as it can threaten the checks and balance of Congress and open a Pandora's box about all of the realistic public finance. So it's based on a loophole from 1996, a bill that discusses a commemorative coin, right, scheme, if you will. According to Law 31 USC 511K, the secretary may mint and issue platinum bullion coins and proof platinum coins in accordance with such specifications, designs, varieties, quantities, denominations, and inscriptions as secretary, in secretary's discretion, may prescribe from time to time. So we'll see how this kind of pans out. I think they're realistically scrambling and running out of time for this debt ceiling, and Janet Yellen has been the point of this, right? The center figure, as she is the Treasury Secretary. She also said it is truly not by any means to be taken as a given that the Fed would do it, and I think especially with something that's a gimmick. So the Fed is not required to accept it, and there's no requirements on part of the Fed. It's up to them what they want to do. So realistically, this is still up in the air. I don't know if it's necessarily going to happen, but this debt ceiling is of concern realistically, and it might take months, like weeks to months, for this thing to kind of pass through and mold over. But there is significant risk that is associated with this. If the extraordinary measures are exhausted and Congress fails to raise the $31.4 trillion debt ceiling, which could happen by early June. So, like I said, a few months, there could be a very big consequence in the U.S. economy. So our borrowing costs would increase, and every American would see their borrowing costs increase as well. That's what Janet Yellen warned about. On top of that, a failure to make payments that are due would undoubtedly cause a recession in the U.S. economy, causing a global crisis, and would certainly undermine the role of the dollar as a reserve currency all throughout the world. So there's still months to do this, but I think they're taking action very quickly, because this is not the only thing that is recessionary, right? A risk of a recession. There's also other things in the economy right now that we're seeing, and they all revolve around the Fed with inflation, realistically, and the quantitative tightening process. So that's one of the main topics at hand, and something that we're probably going to be following for the next few weeks, months, right, until something is resolved. And the worse it gets, naturally, the worse it is going to be for the overall market, and we're probably going to feel those tremors fairly quickly. Now, in terms of other news, there's not really too much to report other than the massive tech run that happened on Friday and is still holding up pretty well, right? There's some names like we have NVIDIA that's gapping up slightly. We have, oops, wrong ticker. Let me just take this. We have Tesla gapping up slightly. We have Apple that's kind of flat, but still trying to squeeze a little higher. We have Microsoft earnings this week that are gapping higher as well. So, in terms of earnings this week, we're going to start with Microsoft on Tuesday. We also have Tesla as well. We have Intel. We have Visa and MasterCard, which are going to be very important as well. But tech earnings are starting to come out, massive tech earnings, which could sway the next move in this overall market. That's going to be something that we're going to look forward to, right? They're probably realistically going to talk about cuts, job cuts, freezing, right? Let's see if they provide some forward guidance, which can really amplify the next leg in this market, right? Good earnings, good forward guidance, man. That's what we're going to be looking for, right? Good earnings is going to be one thing because good earnings would suggest that we've been doing fairly okay in the economic conditions of tightening over the last quarter, right, which are going to propel things to go a little higher, as well as good forward guidance, right? That would expect the economy to kind of go for more of a softer landing in this quote unquote recession that we've entered. Now, with that being said, right, those good earnings with good forward guidance can cause somewhat of a bottoming in the next leg higher and a transition point in a lot of tech. So that's something that we have to look forward to. But realistically, forward guidance has been something that's been kind of neglected and not really looked at over the past few quarters. And to add to that, that forward guidance that has been there hasn't necessarily been the strongest and has presented a lot of doubt in especially big tech names and the overall market. Now, in terms of levels, quickly here today, I want to take a look at a few things. If we take a look at the SPY, I look at Gamma and Delta based on market maker positioning and where they're hedging really aggressively, and we have a level at about 396 to 397 in the SPY. Right. So that area in the SPY kind of constitutes as the 3995, 3996 on the S&P futures, which is a huge, huge region that we've tested now a few times here pre-market that has, excuse me, that has shown us some signs, decent signs of failure and bearishness that came out of that to kind of propel things a little lower. So it's going to be a major pivot today. We'll see how that comes out. I do want to see some bears try to attempt that level so we can get back down into 3978 and see if any of the bulls want a piece of that. But realistically, a huge distribution low that I'm going to be watching for the bulls is going to be 3961. So 3961, if we do get down to that area, I'm expecting some kind of inflection. Otherwise, that would lead to more downside, not only for the day, but could lead for more downside in the earlier half of the week. Now, upside, we're talking about that 3995 region. You leapfrog over that, you have 4002 that sits above, and a huge level at 4025. That's going to be my main target if the bulls can take over today. And if we manage to close above that region, above 4 and as well above 4035, I think there could be a little more room to the upside and could spark the next leg higher. So bears are really clinging on to what's going on right now, and they really want to see this downside open up. Otherwise, there's going to be that extension to the upside for the next few, maybe even weeks before we get whatever catalyst comes. Could be earnings that really turn this market around. So, in terms of the update, that's all I wanted to talk to you guys about today. Looking at that $1 trillion coin that could potentially be minted, right? The debt ceiling is going to be the main focus at hand for the next few months, I would say. So we have to pay attention to what's going on there. So with those levels, with those ideas, I hope everyone starts out small and slower today because we want to really preserve that capital. And right now, I should say we're neutral. Starting off on the Monday, after that strong tech pop and OPEX pop on Friday, you have to stay neutral and understand where those areas are and what you want to trade from those areas. Otherwise, it could get very choppy and very undisciplined. Going in with no bias to start the week, I think, is the best thing with smaller trade size and smaller risk. So with that being said, I hope everyone has a great trading day. We'll see you tomorrow and join us. We're going to open up our live trading rooms now. You can go to community.tradeproacademy.com and we'll see you there.